welcome back to Dukascopy TV. I'm Monica Gibson and I'm joined here by Umberto Boccato from Mirabaud. Hello Umberto, thank you very much for coming in.
Thank you for having me.
No problem. Now we're going to talk about an overview of the market consensus at the moment. We've had some disappointing data from Europe and already Australia, but in terms of your managers, how are they feeling at the moment? Would you say bullish or bearish outlook?
Correct. Many of our managers have performed well during the first quarter of 2013. This was on the back of good equity market returns, but most importantly, we also had two factors that offer great opportunities for our managers. One is the decrease in correlation of stock prices and also the increase of dispersion among stock prices. And this has created a very fertile ground for stock pickers. However, as many of the managers move into the Q2 of this year, they are positioning more cautious because of slower economic growth on a global basis. Also, you still have a lot of political uncertainties in Europe, especially in Italy. And also the earnings releases and sale releases that we had just in Q1 for many of the companies are a little bit less attractive than they were a year ago. So how they're positioned in more prudently? One is by building some type of protection in the portfolio. The natural way to build protection is actually to lower gross and net exposure. They also shorten the euro. They are shorting the Euro-Ribor spread. At times also they are going short the market through puts. The volatility is quite low, so it's a cheap way to have insurance. And one interesting tail risk hedge they put on is actually to play the spread between the Italian debt under the US law and the Italian debt under the Italian law. And the thesis behind this trade is that in the case the Italian debt has to go through some type of restructuring or default workout, is believed that the creditors holding debt, which is under US law, actually will be much more protected than that under the Italian law.
Does sound a very interesting, very smart move, but are there any particular investment strategy which are offering opportunities at the moment?
Yes, at times the equity shareholders are not fully appreciated by the marketplace. And there's one particular strategy that offers the opportunity to improve the returns on equity, and that's active investments. In particular, these are managers who are looking to either in a very vocal or even a visible way to solicit, to encourage management to improve the return on equities. And we're seeing a lot of companies that can issue debt at very low rates. They're holding a lot of cash, and there's an opportunity to improve the return on equity, and that's by either dividend buyback, dividend payout, or stock buyback, or even at times engage in some type of merger and acquisition activity. We have some clear example of stocks which have appreciated this year, also thanks to an investment activism approach, and these are Apple, Dell, T-Online, Yahoo.
Now, Umberto, you mentioned stocks. More specifically, in terms of stocks and trades, are there anything in particular that you could tell us your managers are keeping an eye out for at the moment? Yes,
there are two interesting stocks I'd like to share with you. One is Kinder Morgan. It's a transportation, pipeline, and energy storage company in the US. And the team behind this company is the energy revolution happening in the US. There are some economists, some analysts that actually think that the US will become oil independent. And there's a lot of exploration and extraction of oil in the middle of the country of the US. However, all this oil needs to flow in the coastal areas. And that's where you have a company like Kinder Morgan that offers transportation and pipelines, and they're generating significant cash, and also they return this cash to the shareholders. The second company is Svenskan Handelsbanken. It's actually a bank in the Nordic region of Europe. And the motto of the bank is quite interesting because it promotes proximity and responsibility. And their motto is actually the bank is a branch. And they've been growing quite significantly in the Nordic region. Is one of the few banks that in Europe have not had any problems during the latest financial crisis. As a matter of fact, in 2008, not only did not receive any type of support from the Swedish central bank, but they actually provided the capital to the central banks. They have a very strong loan growth, and this year they're looking to pay a 4% dividend to their shareholders.
Well, Umberto, it does sound like a very interesting spot there. Thank you very much for sharing it with us. Now, before you go, we would like to invite you to take part in our Dukascopy question. We ask you, if you were to invest $1 million for 1 year, which instrument you would choose to place them in. Now, if we look at the board, we have some options: real estate, equity, bonds, gold, cash, or indeed oil. So $1 million for 1 year, where would you place them?
I would certainly invest in equities for two reasons. For technical reason, all the central bank quantitative easing is providing a lot of liquidity to the marketplace, and this liquidity is favoring an asset price inflation, especially in equity. And on a more fundamental basis, a lot of companies are well positioned, especially the large cap, strong franchise, to weather this slowdown in economic growth for the next year.
Perfect, Umberto. Thank you very much for taking part and for joining us with your perspectives once again. Thank you.
Thank you. My pleasure.
Well, that's all from Umberto and myself. Click back to Dukascopy for plenty more exclusive interviews and press reviews. Goodbye for now.